Okay, greetings, market rebels. Welcome to this week's sector situation. Excuse me, I'm Wayne, my partner Ryan. It's probably wrapping up everything for this week's market outlook, which will be heading out later today. It is November 20th, Sunday. It's sometime in the afternoon. I mentioned in the macro measure I've been really struggling the last few days from COVID. Managed to escape its clutches for, I guess, nearly 3 years, but it finally got me the tail end of last week. And I'm just trying to get a quick assessment on things to get something out that hopefully can help out this week. So let's get moving with the disclaimer. And then I will flash the intellectual property rights notice. And hopefully I can hold out and get this done. Just had a real struggle on the end of the last video. But everybody's pretty much been through this. I guess I got lucky for a while. Finally got me. Anyway, so I want to start out on the SPY just to put the context in place for how I'm looking at least the things right now. And I don't like when Thinkorswim does that, but it always does that for some reason. So the way that I really explain the nutshell of this week's macro measure is that using SPY as a proxy just for the overall take on the market. I mean, I think you're giving the nod still to bulls with the way that we've been working our way up and the fact that they've held support. They've had a nice burst, then came back, found support, so on and so forth. Just did that again. And I think that's kind of where we ended up last week, thinking, it needed to cool off and then see how it reacted from there. And then, of course, we knew there was news that would impact it in the form of PPI. We knew there were earnings that could impact it. And then all in all, I mean, kind of like down small on the week, but probably not bad if you're a bull, really knowing, right, that you had this major burst and that you did really need a pullback. So if you end up down small after all said and done, that's not such a bad thing. It's probably can be looked at as a healthy development. So with that in mind, I would say that I'm really not sure. I mean, that's really where I ended up, that I think it would take very little to produce a new closing high. And if I'm going to go short the market or short stocks generally overall, right, look more to the bear side for trades, I wait till this low is on the verge of getting taken out, because otherwise, right, you still have a higher low put in place versus here, and you have higher high put in place. So overall, not knowing what news is coming out, I'm saying that let's continue to give the bulls the benefit of the doubt and go from there. But of course, news is so important, and a lot of people will make the argument that it's in the chart, doesn't matter, that it'll all sort out. I think over the course of time that argument holds up better, where a lot of things do get that they would think are just dramatic changes that just get factored in, and the market continues to roll on its merry way, the way that the trend was initially in place in that direction, essentially. So that would be right up from here on this intermediate term trend that we're looking at right here. But in the short run, I don't think it is true. I think that you can have dramatic movement that you have to live through. And if you're a short-term trader, that's what matters. So you've got to address the here and now if you're trading over the course of just hours or a few days, like swing traders tend to do. So I'm always really looking more towards swing trading, more so towards swing trading than any other form. That's really what we've been doing most of, right, the last several years with Market Rebellion. So I'm looking at it that way, that we've got this kind of give the benefit grudgingly to bulls, even though we're probably still long-term bears, but there's still a lot of things happening in sectors that I wouldn't dismiss, right, overall, that they could move. And I think you have to wait for the data, and it's worth flashing that data really quickly if I can. I did this in the other video, but I think you've got a really light start to the week. We've got just a little bit going on, and then you've got nothing happening naturally on Thanksgiving and on Friday. But Look at this Wednesday, and it gets punctuated with FOMC minutes and Jerome Powell. So that's big stuff. And there's even some serious stuff that happens prior to that. So there you go. I mean, it's just, that's probably where the week gets made. So what I've always noted is that when you don't have a great, really strong lean, or on balance, you have a confident lean, you're probably reading the market right. And it's probably better to really be prudent and wait for the market to reveal itself more rather than reacting. Now, that does, if you're disciplined with position management, that's not a problem to get in and get out anytime, because you can trust yourself. So that shouldn't preclude you, if you see early week movement, from jumping in if you like it. But I'm just saying that overall, if you're really not that impressed by anything right now, I can't blame you. I'd rather wait and see if we can start getting a new closing high and then go with it. And if we can't get that, and if it starts sticking out this low, I'd be willing to trade it that way. And that would be a concerning sign, which I covered in macro measure, that we don't quite make it where I think we should, at least in my book, and you roll over sooner, much like this low got put in, and it was probably not anywhere near where we thought it could ultimately get to if this negative bearish action kept working its way out. It didn't. They reversed it, and that's what you get. And there's a lot of folks that could get caught offside that way as well. It's getting very interesting with all the different factors that are coming into play. But let's pull up our main sector chart, which I think it's this one here. And it is that one. So let me bring this over really so we can get a quick look at the 12 sectors that we start out with each week. And I'll probably keep this shorter. I hope I keep this shorter than usual. I'm just really trying to still like form all of my thoughts on things, because I was out of it at the end of the week and trying to do my best to kind of catch up on what happened. But overall, I think I'm starting to get a little concerned about XLE, which I'll talk about. XLK, that doesn't have the weights that some of the other tech ETFs do, but and some of the components. But some of the big names I talked about in macro measure, if they start to take off, which they could, they've got a higher low put in potentially. If they start to go, then that'll probably be some kind of the tonic for a lot of things. Normally that's what happens. But a lot of these sectors have done a nice job of pulling back and then trying to work their way back up, even overbought things like XLB and XLI. You could see that. XLU is working back up towards the top there. This is a nice little corrective action. Now, on all these, I mean, XLP has been remarkable that staples just keep going. And XLY, the consumer discretionary, that did the same type of thing. And, nice pullback, kind of like the market there, and then tried to reassert itself. Now we have to wait and see, but it really wouldn't be, you really couldn't argue that they continue to, at this point, they continue to hold higher lows in place. The question remains, will they be able to, a lot of them be able to reach new highs, right? That's what we don't know yet. If you do if they have a failed swing back up and then you don't get those highs taken out, then get ready for another leg lower and possibly gap closures. I mean, that's really the message of the sectors, I think, is that they're all poised, shouldn't say they're all, a lot of them are poised to want to try to go again, go again after putting some corrective action together, much like the market did. But just as with the market, we have to be cognizant of the fact that if it doesn't take out the highs, right, that's your first sign that you should be on, you're in and up. Let's look at it just objectively. Let me take one. I'll just take, just to make it easy, I'll take transports. It'll be a good example, and we'll take it right here, and I'll switch over to it. So XTN, a lot of this stuff looks similar. So here's your transports, XTN, get up here, hit the 200 like we're expecting other things to do, stops it like a brick wall. You get the pullback that was due, that we thought should have happened really starting on Monday, but it didn't really happen until Tuesday. And then came back, found support. We thought this could be a scenario, which it turned out to be. But you've got that, still have the consistent higher high, higher low look. And this is healthy that this thing finally did have a little pullback after this massive burst. And so now, right now we have to be on guard for come up with lower high. That could be a problem, right? Or just start rolling over from here. That would certainly be a problem, right? That would be even weaker, because who knows what news brings. Maybe news brings immediate weakness over the weekend for Monday morning. So that's what I'd be on guard for. But if it's working its way back up, there's no bad news in a major macro sense out there. Markets operating more bullishly. I would be fine after that corrective action to start getting on board, seeing if it can work back up and retest this 200, excuse me, in purple. That's how a lot of sectors are right now. What I want to note on XLE, because this is more of a highlights video because of the situation I'm in right now. Excuse me, get some water. Sorry about that. This is getting a little concerning to me, because this has been struggling to continue to go. It had a nice little burst. Some trades were okay, but I've added a couple on the bear side as well to try to prepare in case this corrective action takes on more of a life than it has so far. That's in UOA Pro. And where's my, yeah, there you go. So, but here's the problem. We've noted this, that it doesn't seem like crude is on the same page as oil stocks. I got to get this fixed. This just bugs me. I don't know why this keeps doing this to me. But this look how this finished. Now, I always make this point that the oil market has its own issues, right, own characteristics, in things that impact it. Essentially, there's a lot of things out there, but this is not really great action. I mean, if you're a bull, this is really not great action, and yet the oil stocks are not really rolling over yet. Again, they're not near. They're far away from any kind of a low, right? The way they are still acting, and I think there's a lot of money that's gone in there. From what I can tell from looking at some measures, I think a lot of money has poured into the oil sector names and is long them. And so that means that there's potential there, right? I'm not giving up on the oil yet. I mean, it's held on to the 20 here. I should say XLE energy. It's held on, and that's fine. And it still has a higher low put in, and it has a higher high here. So it's not over, right? But I'm just saying that with oil futures continuing to roll over so far, this is a little concerning that these are way up here with oil as down as it is, as far as it is right now. And this was something that, I would think with the way they've got so many other sectors screaming, you would think that this would be, there's people talking that we're not in a recession, even though there were 2 consecutive quarters of negative growth supposedly. But whatever the case may be, not in a recession. And so everything's still fine. And if that's the case, right, then this should be maybe doing better. There was talk that after the election that oil would be heading higher, but that just hasn't happened. So I think you have to be careful in here and keep your eye on what's going on in the crude oil futures, because this is sort of a divergence that probably has to work its way out one way or another. And there's a lot of money, I think, that's invested here. I shouldn't use the word invested, but at work here in the form of long side trades, which again, when a trade gets too crowded, of course, they call it a crowded trade for a reason. And that means that too many people are on that side essentially, and makes it difficult because a lot of people have already bought. And so when things don't work out and people realize that it's not playing out as they expected, then there's a rush for the exits. You can get violent action the other way. So I'm not saying that will happen. Please understand that. I'm just saying that I think that's something worth noting I would be careful in there if this starts rolling over, because if that, especially if oil keeps rolling over too. So I just wanted to note that that's important, switching back away from percentages again. Another important sector we'd like to talk about is SMH. And this is a big deal, obviously for all the obvious reasons, but hey, despite everything that happened last week, this looks a lot like what we saw in the major index ETFs. And excuse me, if you told me I'm a bull and if you're going to jump from say 194 to 230, so call it about 35-point jump, and then you're going to give back about a little more than half of that and then start going again, I would say that's okay. That's not too bad, right? That's something I can live with, because I'm probably now on my way back towards where I was with one more solid day, and then I can see if I can take out this 200 in purple. So that's the big question I think in here is it seems like they're popping the volume on the up days, and on the pullbacks it tends to tail off, and that's a good sign. We haven't really seen that type of stuff all that often, but it seems like there's more interest in buying excuse me, than selling. And so just for now, so again, I'm going to give a little bit of the nod that way, but we are at resistance. That's what this line is. We did pop through there easily, but 200 served as resistance. But I think you have to give the nod to them and see. Now, you put the lower high in, you never get back to the 200, start rolling over. This is what I would do. I would put a line in right here, right now. And if you want to get short this thing, you think it's ran too far, too fast, it's ridiculous, the market starts rolling over, they don't like what Powell has to say, excuse me, or the minutes, then you could use this knowing, right, that you're counter to the short-term trend, kind of the intermediate term trend, but you're in league with the longer term trend. But that's what I would do. You would have to look for some weakness, but that really puts you at the 150, right? If you look at where you would lose support right now, it's really near the 150. So that might be an aggressive level to hold on to. Naturally, if you want to be more patient, you'd have to wait for that low to get taken out right there. But this is it all goes back to the SPY and the other major index ETFs, and everything's really at a tough call spot. And I think that when you see that, you just should be more, you can trade, sure, but I would just be a little more patient about things and wait for some, wait to get bigger about things, unless something really dramatic starts unfolding. Now, here's the January lumber future, and this isn't anything special right now. So again, this to me, I'm still struggling with this makes sense to me. I mentioned that before, given what's going on in the U.S. housing market. And then, excuse me, if we look at copper, and this had a burst a couple weeks back, and it's giving it up. It's coming back into where it really broke out from. It looks like to me. So, this could be the start of something, or it could be a flash real flash in the pan. This is coming back in more in line with how I think things are really shaping up at the moment, not long range, but just the stuff I'm seeing right now in terms of economic activity out there, and how it's really not percolating for obvious reasons globally. Excuse me. But these are not raging bull signs yet, right? This is good that we did this, of course, and you would want to see a higher low get put in here, and then you could try to build on that. And that would maybe really be a very important sign for maybe several months, if they can put in a higher low and then work back out and take out that high and take out the 200 day. But until then, right, there's really nothing to say other than you're coming back in at the moment. We'll see if it supports higher or it just comes right back into the breakout and it's just completely erased. If it comes back all the way down towards the 100 there, which is the dashed white line. Let me get that fixed again. And then let's take a look at housing, just to be thorough with what we typically do, and XAU. And I think I'm going to have to call it after that. I'm struggling again. So on housing, you can see it's a similar pattern, right? I mean, this is the same thing we've been talking about. Just like last week, we thought coming in that a lot of stuff needed a breather. Got that. We thought we'll see what happens where they take it down to where they find support. They found it right where you'd expect, where there's a confluence of the 100, the 10, and the 150 there in rust and the white lines. And so that reversed things, and they're working their way back up towards the 200. And now you just got to wait to see they can get it back and reclaim the 200 or not. It would be, to me, again, this makes very little sense, but remember, in the seasonality and then save their own bacon mode, Wall Street's geniuses are in this time of the year typically. All things are possible when it comes to their own bonuses and making their performance look far better than it really has been for most of the year. And then we have XAU, which XAU, this is one I'm hoping, again, is a lot like what I saw with copper, and I'm hoping it's going to come all the way back in so I can buy more. I mention this every time, but it's just true that I want to acquire more of these at lower levels. I did dollar cost averaging somewhat at lower levels, but I'd still rather lose on those and buy at lower levels. But it's not cooperating. You have to give it its due. Right now, this is almost textbook, where you get this really strong move. Excuse me. Oh, sorry about that. You get this really strong move, and you pull back to where we'd expect there to be, or former resistance, and this is where we'd expect there to be support. And so far, it has supported there. So this would be a good sign if you're a bull, if you support and start to go. It really wouldn't take much of an effort to eclipse those we're back on this. Geez, Thinkorswim's even fighting with me. I must have ticked off the universe somehow last week. Anyway, it wouldn't take much to move this up and then eventually visit the 200 there. And then I think carry beyond, honestly, if it gets there. I think it's going to keep going. I think the move you're looking at is potentially pretty substantial. If this high gets eclipsed, excuse me, that would be a lot of people. I think have been waiting and suffering, and I think a lot of them are probably disciplined, knowing how frustrating the metals space can be. But they're riding a lot of ships in SMA land, as you can see, with the slopes changing. Even the 50s up sloping, and the 100s not too far behind. So this is starting to look a little bit better. We've been talking about that for some time, but it's doing the old fits and starts thing, but that it always seems to do. But it definitely has the potential there if this high gets taken out. So if we get UOA, I log this in my mental notes that if we get UOA, I'm ready to finally start trading this more aggressively as a bull. We do typically get bullish UOA, ostensibly bullish UOA from time to time in the metals names, and it's been fool's gold, so to speak, many times over the course of this year. And I feel, again, fortunate to have avoided it, just because put a few ideas in here and there, but didn't really put anything aggressive in or across the board stuff too often, because maybe it's because of the trend. But now things are starting to take shape a little bit, I think, and I think I'm going to have to give that some more respect than I have been. Gave it a little respect recently on a few names, but I'm going to do that if it starts taking this out, because I do think it could start working back up. And who knows why? I'm not sure, and I have to apologize. I feel a little cloudy, just not dialed in on what what's been happening. I just wanted to make sure I got this out to try to help out a little bit with what I could see quickly. I've been spending hours trying to formulate things because I'm not in my normal state right now. But yeah, I think you got to like this. I mean, you got to like all these highs being taken out. You've got to like this pullback if it holds. This is textbook breakout, come back, find support where you'd expect or want to see it. And then if it can go, that's good stuff usually. And that would give you, I think, that's why I'm saying like this is so textbook and stuff that people like to see and people have been waiting. And you could just see that the slopes, everything's sloping up, and you could see the higher highs and higher lows sort of starting to emerge somewhat. These are good signs. So that could be interesting. And so keep your eye on that one. If it starts to act well, that could be an interesting space that finally puts together more of another sharp, strong move that comes out of here that maybe carries it up, maybe 10, 12% over the next couple of months type of thing. But I think I better wrap it up. I'm sorry I can't do a little more and bring things like a little more cohesive here, but just been a real struggle. So I'll see you all this week. Hopefully my stuff that I've got picked up will kick in a little more for me, and I'll be able to help Ryan and Greg and Pearson out all week long. So everyone take care until I'm in touch with you throughout the week. Thank you.